Hi, I'm Brian Wing, Chief Investment Officer with PAX Financial Group. I'm here to share some insight into the current market environment. I'll go over three things. One, current market trends and how things have changed since a year ago. Secondly, I'll cover the Fed's recent actions. And then lastly, we'll cover the economy heading into the holiday spending season. So let's dive in. First, we're now in the midst of what has historically been the best 6 months in the market. The months of November through April have averaged about 7% in the past, and over the past 10 years, it's been a little bit better than that at 8.8% a year. The S&P 500 has also hit several all-time highs recently. Now, if you're worried about investing on the heels of a market high, don't be. Dating back to the 1950s, the 6-month returns following all-time highs are in line with averages, so your probabilities of success at this time are just about as good as any other. But what's been the big difference now versus a year ago when the market was in a downward spiral? Well, the same things that drove volatility last year are now stoking optimism for this year. Namely, I'm talking about trade and the Fed action. While verbal barbs and tariff threats were being exchanged between the US and China last year, we're now looking at a potential trade deal, albeit a small one. The market's also handling the news of the Federal Reserve's rate cuts more favorably than last year's rate hikes. Interestingly, the latest round of cuts in October was made when the S&P 500 was within 1% of an all-time high. Now, dating back to the early 1980s, this kind of action has happened 11 times, and 1 year later, the S&P 500 was up all 11 times by an average of about 15%. Now, on the economic front, heading into the holidays, consumers have been spending at a solid pace, and the trend's likely to continue. Reasons for their optimism is 1, health of the employment market, 2 is solid wage growth, and 3, claims for unemployment benefits have hovered near cycle lows. Now, if the consumer feels good about the economic outlook and are finding employment, they may be more likely to spend money. Now, as positive as the fundamentals of the market and economy look right now, please keep in mind that markets are cyclical. A season of volatility will ramp up again. However, as always, keep focused on your long-term goals. Talk with your trusted PAX financial advisor to talk about your concerns and aspirations. As always, thanks again for watching.